On-chain data shows the Bitcoin miner revenue percentage from the fees has exploded recently. And here's what's behind this sharp growth. A couple of days ago, the much anticipated fourth halving, a periodic event taking place roughly every 4 years, where block rewards that miners receive for solving blocks are permanently cut in half, finally took place on the Bitcoin network. Well, this was a major event for cryptocurrency. Another watch development occurred on the network simultaneously. It was the release of the Runes, a new protocol for minting fungible tokens on the network. The Runes protocol was developed by none other than the creator of the revolutionary Ordinals protocol, Casey Rodarmor. The Ordinals protocol was released back at the start of 2023 and provided a way to inscribe data directly on to a Satoshi, the smallest unit of Bitcoin. Second, of course, the same time and exhorted, thanks to this protocol, a variety of applications became possible on the network, including non-fungible tokens. These applications have quickly gained population on the network. With the launch of the Runes, there is now a sort of sequel to this legendary protocol.
I added about a changed place, and
how are the Runes different from the inscriptions that the Ordinals protocol produces? As Rodano's Ordinal Theory Handbook puts it, whereas every inscription is unique, every unit of a new rune is the same. They are interchangeable tokens fit for a variety of purposes. Thus, the runes create the opposite of NFTs, fungible tokens. And fungible token functionality isn't exactly new for Bitcoin, however, as the popular BRC-20 token standard already exists. So, why the hype behind the runes? The reason behind that is the fact that the latter is much more simple and efficient than other standards. The BRC-20 tokens use a roundabout rate to inscribe fungible tokens, leveraging the Ordinals protocol and running on an account-based system similar to Ethereum. Their complexity means that they require 3 transactions in order for one transfer to be complete. And the runes, on the other hand, use an unspent transaction output system, similar to how Bitcoin itself works, and are present entirely on-chain. This means that they can easily be accessed on block explorers. Also, unlike the BRC-20 tokens, they require only a single transaction. Since their inception, the Ordinals-related applications have been making waves on the network, and during peak mania periods, they have even been causing some temporary but drastic effects of the economics of the cryptocurrency in terms of one particular metric, the transaction fees. These applications naturally influence the traffic on the blockchain, and when demand for them is high, this traffic can even surpass all other uses of the cryptocurrency. The runes appear to have followed in this lead, as the transaction fees on the network is also shot up since they've been introduced, as CryptoQuant has been later to prevent minor constructions. Research Julio Moreno pointed out yesterday in an X post, the miner read from the chart. It's visible that the miners made a record high $107 million in total revenues that day, a whopping $80.5 million of which came from the transaction fees alone. Historically, fees have been much less relevant for miner revenues than the block rewards, but the recent applications on the network have caused at least temporary fluctuations where fees have spiked to notable levels. With the latest halving, the block rewards have been significantly slashed again, meaning that the primary source of revenue for these miners has been tightened. As halvings would continue in the future and these rewards would shrink further, the miners would have to become increasingly reliant on transaction fees in order to survive. Ordinals and runes may provide a glimpse into a future where such applications would dominate the Bitcoin network and inflate the fees enough for it to serve as the main source of income for the miners. So, Bitcoin had slipped under the $60,000 level in the lead up to the halving, but since this low, the price has rebounded back towards 65,900.